hoo-ha and the celebration of Mr. Trump being elected and all these things he's going to do, this three arrows policy and all these things which you can get into, which I think are not going to happen, uh, that realities could possibly set in. And so then, that could be a situation where we might see a sell-off in 2025. Is it possible that we could have 20+% gains in the market again this year? Absolutely. Is it possible that the policies take effect and we have a new golden age? I was around when during the Reagan administration, when he got elected after the horrible Carter administration. I was a teenager then, so I remember the Morning in America and all of those things. And so, but we're in a different situation here in the United States now than we were 40 years ago.
Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian. Some of you know me as Triangle Investor from social medias. Before I introduce today's guest, I would like to ask you to hit the subscribe button. If you like the content, feel free to like and share. I always reply to your questions and comments and will continue to do so. That said, I always enjoy talking with guests who have knowledge and the ability to talk about multiple topics, and definitely one of them is John Polomny from the Actionable Intelligence. John, great to see you once again. Thank you for coming.
Thank you for having me, Lucian.
Thanks. John, we are recording this on January the 3rd. We have entered in the new year, 2025. I think you would agree that 2024 was a challenging year in a lot of aspects, but what 2024 events are the most significant to you and you would say will influence on the markets in 2025 and beyond?
Well, that's kind of a broad subject, but let's start, I think, with one of the things I think is the main area that was impressive, but yet concerning going into 2025 is the continued, well, it's back-to-back positive years in the U.S. stock market, the NASDAQ, and particularly the Mag 7 stocks, if you will. So we've had now back-to-back years of 20+ returns in the S&P 500. We've had outlandish returns in some of these what they call Mag 7, Mag 10 stocks, what have you. Everybody knows what they are. And although that's good if you held those stocks and bad if you didn't hold them, I am getting a sense based on what I've seen in the past that we're getting into what I call like bubblicious type situations here. We've got a tremendous amount of what I consider over optimism and overvalued market here in the U.S., for example. And I was around when we had the tech wreck in late 1990s, early 2000s, the housing bubble. I've seen the same type of sediment developing. I was just looking, for example, before we started this morning for this interview, I use it as an example, and there's plenty of other ones like this fart coin. It has a $1.3 billion market cap. This thing has no utility whatsoever. It's just a manifestation of the FOMO and greed and the bubblicious conditions that exist. And so I think that was one of the major things from a financial perspective last year, and then going into 2025 that concerns me just because I think that, we had the election of Mr. Trump re-election, if you will, and I made a video a couple weeks ago, and I'm using this term. A lot of times the stock market will buy on rumor and sell on news. And I've said, buy the election of Donald Trump, but sell the inauguration. Why do I say that? Well, I think that, based on the previous 4 years, the administration that we had here was, well, unpopular, let's say, and had to wear a lot of issues around economic performance where people weren't happy. But I think what people have done is they've taken a lot of their aspirations or what they want to happen and place it on Mr. Trump. And I think that there's a good chance that we're not going to get a lot of things that he's proposing to solve are going to be a lot more difficult to solve. one of the things I noticed about him recently, back in his first administration when he was president, after he initially got elected, we had a dip in the stock market, then it took off. This is back in 2016. And he was constantly harping on, the stock market going higher. If they made a new high, he was, beating his chest like he personally did that. He's not having that view now, even though the market here is making new highs recently. He's actually cautioned people about it. So he said, this might be a little bit overvalued. It might have some issues. He's not being, so I picked up on that vibe. So I think going into 2025, I look at having been a former poker player, I look for the setups, okay? And it's like, okay, what's the hand I'm being dealt? I have a market that's at extreme overvaluations. Breadth in the market is in the US stock market is very tied to these few 7 to 10 stocks that are making new highs. I mean, you have to look at like Apple, whatever the market cap is. What is it? Close to $3 trillion. But look at the growth there. Okay. You see a guy like Buffett who bought it, a decade ago or whatever, he's selling down his stake. So you pick up on these little vibes, and I just don't I think that a lot of the problems that we have here in the US now are so entrenched that they're not going to be easily solved. And I think as the hoo-ha and the celebration of Mr. Trump being elected and all these things he's going to do, this three arrows policy and all these things which you can get into, which I think are not going to happen. Uh, that realities could possibly set in, and so then that could be a situation where we might see a sell-off in 2025. Is it possible that we could have 20+% gains in the market again this year? Absolutely. Is it possible that the policies take effect and we have a new golden age? I was around when during the Reagan administration, when he got elected after the horrible Carter administration. I was a teenager then, so I remember the morning in America and all of those things. And so, but we're in a different situation here in the United States now than we were 40 years ago. So that's one of the risks I think in 2025, specifically to what he's saying. One of the main pillars is that he's saying is kind of ties into what a lot of things I've talked about before around energy. One of the three arrows that he came up with, kind of playing off the former Prime Minister Abe's arrows policy in Japan that he had, but one of his main things is that he's touting us to raise oil production in the U.S. by 3 million barrels a day. That's already morphed into 3 million barrels of oil equivalent per day because you're simply not going to be able to raise production by 3 million barrels to get energy costs down. I mean, if you look at so I'm interested to see how he's going to motivate these big operators in these shale basins to basically invest money against their own interests. They have no interest, based on the conference calls I've listened to with the big operators like Chevron, for example, and others. They're not going to just raise production and have the oil price collapse. Why are they incentivized to do that? Especially considering that all the incentives for these managements have changed over the last several years from drill, baby, drill. I mean, they were literally incentivized. I remember being in when I was doing renewable projects in Oklahoma and other parts of Texas that were booming, like in the Scoop play up by Kingfisher, Oklahoma. You'd go into the county court area, and all these landmen would be in there registering leases and stuff, and all the activity that was going on. We're past that. The managements are not incentivized to just raise production if you raise production by 100% or 50%, your stock options kick in. That's all. Those guys are all gone. And what we have now is a more rational capital allocation by a lot of these companies, which is focused on maintaining production with a little bit of growth here and there, and the focus is more on capital returns to shareholders. And so that, to me, that's one of the big things that he's touting, and it's just not consistent with so it'll be interesting to see how the administration is able to do that. I think it's going to be more of it's going to be we're going to call it 3 million barrels a day of oil equivalent. So that's going to be natural gas liquids, electricity, anything they can throw in there, because you can do the conversions from BTUs, kilowatts, whatever, to, units of energy, and call it good. So we'll see how that goes. And that's a big pillar because, getting this inflation under control, they've decided the main lever they're going to use is to energy costs, get that down because obviously we all know that energy is such a large proportion of the cost of everything. So if they can get that down, they think that takes a lot of pressure off. I don't know if they're going to be able to do it. So what else are they going to try to do? Okay, deregulate the economy. I'm all for deregulation. But pe if people think that, he's going to do a Javier Milei here and just go through and get rid of all these, this simply isn't, the United States is not Argentina. So I think there's, this Doge, a lot of emphasis has been put on this Doge committee with Musk and Vivek. Um, but people are going to find out real quick, the uninitiated, about how our bureaucracy and how all these mandarins that are in government that have ensconced themselves over the last two generations, they've erected a lot of barriers specifically to enable people not to be able to get rid of them. And so we're going to see. So I think in that situation, you're not going to get rid of $2 trillion in costs. I think they can do a lot of things around deregulating and things like that. But if people think they're just going to go in there and get rid of, half the federal workforce and get rid of all these departments, I think they cut 250 to 300 billion and call it good. That's a drop in the bucket. So anything is better than nothing. I would like to see a smaller state than a bigger state, but I think people are going to find out real quick. Then you talk about immigration. Well, okay, people don't understand the immigration laws. You can't just drive up like in the 1970s to a meatpacking plant and have a bunch of agents run in and grab every Mexican you can find and then just drive them to the border and throw them back over the river. We have laws here now. You're given a even these not terrorists but these gang members, they'll be arrested. They'll go over. That'll be the low-hanging fruit. That's what you'll see in the media. But they're still entitled to a hearing in front of an immigration judge. And the backlogs now, you only have 500 immigration judges. You only have a certain amount of ICE agents. So this idea that you're just going to have like in the Eisenhower administration, they had a mass deportation was called. This is what was actually called Operation Wetback. They were able to do that. That's not going to be the situation now. So I think a lot of the expectations are real high on some of these things, but I think the reality is going to come in lower, and I think that has a possible risk to the market because I think there's a lot of euphoria now that it's morning in America, we're unstoppable now, but then I think the last thing I'll say on this uh, is that the country, the United States federal government, is now $36 trillion in debt. The current trajectory for this fiscal year of 2025, which started back last October, is $1.8 trillion deficit. So that's going to be added to that debt. So this is the year people can look this up. It's not me, I Chat GPT works real good for this stuff. The Treasury Department in the US has to roll or refinance $7.8 trillion of that $36 trillion debt, plus sell another $1.8 trillion in bills and bonds. So you basically need to sell $9 trillion of debt this year. And how are you going to do that? Can the market absorb that volume of debt? Certainly not on the long end. I mean, I think you're already seeing crack. It's kind of like I tell people, and I'm not negative. I'm just pointing this out as a risk. I don't know what's going to happen. I'm not a perma bear, but I look at this and it's like I'm living on Mount Vesuvius. I'm seeing smoke starting to come out of the top of the volcano. I'm feeling these tremors in the earth. This is what's analogous to these situations. Maybe they can pull it off. Maybe they will sell the debt. Maybe rates won't go up. But I think it's interesting that we see that the Federal Reserve in the U.S. has cut rates, I think, 100 basis points so far, and the long bonds went up. That's totally not the reaction that you have seen in the past. Typically, you would have want to cut rates on the short end. That would drag the long end down. People would refinance. You'd get another upcycle, blah, 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 blah. We know it. So things are not happening the way they had in the past. So what happens if you try to roll this debt? The Yellen Treasury has been selling a lot of this debt on the short end with bills and, shorter term treasuries because the rates were lower. Now, if you try to go out on the long bond or the bond, I look at 2025 as be the resurrection of the bond vigilantes. They finally woke up out of their tombs and have now come back. So we'll see if, in the United States has put themselves It's not just the previous administration. It's just been the whole post-World War uh, II world order that they've created. We have a lot of enemies now. Who's going to buy all this debt? And so, yes, I think President Trump is very good at cajoling and strong arming people. But I think you're starting to get in a situation where people are like, wait a minute, you know, my whole framework that I have over all of this is this developing new world order where the emergence of the global South and East, which is slowly but surely gaining more economic and political power around the world, and the receding of the post-World War II neoliberal world order that was dominated by the Atlanticist hegemon. And so these are in conflict. So you have that constant low-grade fever running in the background. I just saw yesterday China put 26 different entities in the U.S. under sanctions. So we have a lot of things going on in the background, and I think this idea, well, hey, we got rid of this previous administration, and it's morning in America, and it's nothing but sunshine and roses. I think there's a lot of risk out there, which I briefly touched on, but happy to talk about. There's still opportunity though. It's still the best place to do business in the world, and I think that there will be opportunities, but you're picking up pennies in front of a steamroller right now if you're in the U.S. market in these areas.
Yeah, yeah, all good points, John, all good points. But what keeps Fed away from rolling the ball even further, more printing money? Do you believe we could see anytime soon any changes in monetary systems, some form of returning gold standard or introducing new mechanisms like crypto or other hard assets as a coverage for paper money because they will print more money?
Oh, absolutely. I mean, I go back to Felix Zulauf, who is an analyst that's in Switzerland, and he used to be on the Barron's Roundtable. He's one of my favorite analysts, and he doesn't give that many interviews anymore. He's retired, but I remember an interview he gave about maybe it was 5 years ago, and he made you're talking about math problems at this time. People don't look at things just because something's certain doesn't mean it's imminent. So when I say, okay, well, $36 trillion in debt, it doesn't matter. No, it doesn't matter until the day it matters. And if you've been in a place like Greece or some of these other places, it didn't matter until the day that Friday afternoon when the government decided they were going to do something and they do it on a Friday afternoon to lock everybody out of their ATMs, then nothing else matters after that.
Yeah.
So what I say is just because something's certain doesn't mean it's imminent. But I think you're living on borrowed time, and so you're exactly right. He said Felix Zulauf said, and I was shocked when he made this statement. This was 5 years ago. He said that he expected by the end of this decade of the 2020s that the Federal Reserve's balance sheet could be 40 or 50 trillion dollars. You're exactly right. What they will do inevitably, because this administration also wants the strong dollar is killing this administration. They want manufacturing to move back to the U.S. They're all for this industry. That's going to be part of their tariff arrow. Plus, they want a weaker dollar. The dollar's too strong, according to them. So how are they going to get a weaker dollar? I mean, so uh, you know, my view is that right now the dollar is kind of high because of interest rate differentials. It's kind of those intermarket relationships because the Eurozone and some of these other places have cut rates faster than the U.S. And so a lot of money's come to the U.S. I mean, you can borrow in yen in Japan and buy U.S. treasuries, and you're getting a benefit from that. Plus, just because our market's doing so well, we have the highest level of foreign participation of investors in our market right now. So that's been positive for the dollar. So this is all temporary in my view. Inevitably, the strains of this debt, the entitlement wave that doesn't stop, that's just like a termites eating away at the foundation of our financial system. 10,000 people a day going on Social Security and Medicare, $100 trillion in unfunded liabilities for these pension schemes, not just in the US, all over the Western world. Europe's the same way. They can't afford the promises they've made. So I do think that inevitably this all leads to more money printing. We know that. And so inevitably, I think that that runs out at some point, the ability to do that, because we know the consequences of that. And I do think that you will see some type of, I don't want to call it another Bretton Woods. Who knows what it will be? But I also think that you're already seeing people I'm really impressed with a lot of people, kind of like, especially younger people, understanding like Bitcoin and it's a deflationary type currency. I'm not completely sold on it, but it's also like you see what's happening with gold. Gold is being remonetized, at least by central banks now. They are, because of the realignment geopolitically, it doesn't make sense for a lot of these countries like China. If basically the United States government said that they want to have a war with China by 2027, there's no reason for them to keep buying U.S. treasuries. And so that's why they continue to buy gold and things like that. What else are you going to do? So these people are slowly, the global South and East is slowly but surely increasing gold reserves. Back in the 70s, before we financialized the world economy, at least in the Western world, central banks had anywhere from, 50, 70, 80% of their reserves in gold. And over time, over the last 40 years, as they financialized everything, they replaced those hard assets with financial. Well, that's turned now. That's slowly but surely turning. So I think that, I don't know what the mechanism is. I don't know what the trigger is going to be, but I think that it would be wise for people to keep this in the back of their mind that at some point, people need to be prepared for some type of monetary crisis. It's not going to happen on Monday or Tuesday or maybe even a year, but at some point, you cannot run deficits of 6, 7% of GDP. This is what emerging markets do, and you can just or banana republics, if you want to say, countries that aren't straight. And so this idea that I hear a lot of respected, highly educated people say, well, we could just print money. Yes, you can, but eventually there's consequences to doing that. So I don't know what the mechanism is, but I suggest that at some point it won't be a problem till the day it's a problem, and then that will be the only thing that matters. And if you haven't prepared yourself for that, this is why I suggest people should have an allocation to precious metals that they own in their physical uh,
Or
because yeah, it's insurance, as Ray Dalio says, against monetary and government malfeasance. And then he was laughed at when he said that in front of a meeting that he was having with it was the Council of Foreign Relations. So all these pointy shoes bigwigs, globalists were laughing, chuckling when he said that. And he the retort he said was, and he's kind of a nice guy. He didn't want to like bag on him like I would have, but he said, if you don't own gold, you don't understand history in economics, which is I thought was a very profound statement. I'm not saying you put 100% of your money in gold, but it's insurance.
yeah,
It's insurance against these governments that do not have your interests at they have their own interests and they are not necessarily going to be aligned with your personal interests.
yeah,
That's the
you
best
have
way I can put it. Yeah.
Yeah, you have to have gold. Agree definitely on that. You mentioned Bitcoin. I had few guests that said that they believe that Bitcoin will be the trigger to in 2025 Bitcoin bubble burst. It will be the trigger of market correction. Do you agree on that, or do you believe that U.S. stocks, the mother of all bubble, will be the overvalued stocks will be the trigger for correction?
Well, I was able to read a report that Lynn Alden wrote, and it was specific to she did the work on this to find out what the correlation was of Bitcoin to liquidity. And Bitcoin is it's a very basically a liquidity animal. So as liquidity is increasing, it's very highly correlated to liquidity. And I'm also a big fan of Michael Howell's work that he does around liquidity, and also what Stan Druckenmiller said in the short to medium term, liquidity and sentiment is what drives markets. And so, we're in an upcycle in liquidity right now. The majority of I track central bank actions around the world. We're in a cutting cycle. We're reliquifying, but the initial push and benefit you get from that liquidity cycle takes part in the first third to two-thirds of a liquidity move as you get closer to topping out in liquidity. So I think that a lot of these things have been pushed higher, these bubbles and Bitcoin and some of these other things, uh, as a manifestation of the excess liquidity that's been created over the last couple of years as central banks have been cutting rates, or as one analyst I stole this term from last year, Money Fest 2024. I mean, I think last month I saw I tracked it was 19 central banks cut rates and only two raised rates. So it doesn't really matter what the, Central Bank of Guinea does or the Republic of Georgia, but the trend is clear. Most of the countries are cutting rates and you're going to have increased liquidity. So I think this is why I'm a little bit sensitive to the Bitcoin thing. I understand the concept, I get it, but I think people might be confusing after I read that article that Lynn Alden wrote about how it's Bitcoin's so tightly correlated to liquidity that people should take that into consideration. I think that the whole concept of it makes sense, but you can see the sentiment even on like social media around some of these things. I really have these like anecdotal ways I kind of try to measure sentiment using Google Trends and stuff like that. When every shoe clerk or leecher bum is talking about these things, and where you see fart coin and hawk towel
Yeah.
girl rug pulling. I mean, this is more closer to the end of a move. That doesn't mean it doesn't have a uh, uh, Bitcoin. I really just kind of focus on Bitcoin. All these other, I think Forbes wrote an article. There's like over 1 million coins have been made just in this last couple years. I mean, what are all these coins, So there's a lot of nonsense going on, but I think that the concept of the cryptocurrency and Bitcoin makes sense. Uh, we'll have to see. Maybe it gets a final push if, in fact, they create a Bitcoin reserve in the US and other countries do. That would provide some floor under the price. But I think it's going to do what it always is. When liquidity starts to uh, get constrained, uh, then I think these things that are kind of really need li increasing liquidity to move higher are going to struggle. And I think Bitcoin will be one of those.
Yeah, let's talk a bit real commodities. What five commodities would you say will outperform in 2025 and why? You mentioned, of course, silver, precious metals, silver, gold. What else?
So, I think the best risk reward supply demand setup that I've ever seen in resource markets is the current uranium market. I don't have to go too far into that. I know that that's a controversial statement to make 5 years into this, 6 years into this bull market. I think that a lot of people get discouraged because, you know, they watch a lot of social media and they hear somebody like myself or somebody else say they're bullish on uranium. There's a difference between being bullish on uranium and nuclear power as a the new zeitgeist, if you will. And what I think that some $10 million market cap junior in Saskatchewan that calls itself a uranium miner. This is how things need to get. There needs to be a certain amount of discernment. I'm very bullish. I see absolutely nobody investing the requisite amount of money to deal with the shortage of uranium that exists and will continue to exist. It's just not going to happen. It's not happening yet. I think eventually it will. Um, but you look at the United States, for example. I think that I was just looking at the EIA charts going back. I think in the mid 80s, the United States mined 30 to 40 million pounds at the peak. I think it was in 84 of uranium. We didn't even do 1 million pounds last year. And you can look at the people that are redeveloping brownfield projects in the US, for example. Every one of them struggling. It's the same story. You have Encore right here, literally up the road from me. ISR all over the different ranches that ultimate. Not enough drill rigs, not enough crews to man the drill rigs to put enough wells in. So that's happen. UR Energy, where they said unqualified people, we don't have enough qualified people. It goes on and on like this. Okay. Then you have the big players like Cameco and Kazatomprom. They're not going to raise production in this environment. I mean, uh, Kazatomprom, this is interesting. This is why you talk about like geopolitical. I don't know the full story yet, but we just saw the news the other day where this joint venture of the big
Okay.
mine that have with Cameco
Yeah.
all of a sudden has stopped production for some reason. We don't fully understand why
Yeah, due
yet, I
to
don't think.
approval delay. That is the
Yeah, somebody didn't
official.
didn't file a form. Yeah, I mean, what's really happening here, Lucian, is as I've told people don't want to talk about geopolitical. This is the geopolitical influence of Russia, Kazakhstan, China, all that uranium, you can forget about it. It's not going to go to the West. It's going east. And whatever excuse has to be made, whatever needs to happen. And so I think that if you don't consider these things from a that's why that over umbrella that is over everything, you have to consider that. That's what's happening. I mean, these places are corrupt places. Kazakhstan, Russia, the United States is corrupt. The governments are corrupt, okay? You're dealing with sociopathic people that are trying to get the maximum of advantage, okay? And so, the United States initiated the ban on enriched uranium from Russia. We brought that up last year. We're going to force Russia to its knees economically because we are for democracy and self-determination in Ukraine. That's the story. Okay, fine. I don't control that. I don't think that that's true, but that's what the story is. So therefore, we're going to do all these things to bring Russia to its knees, okay, and force them to allow Ukraine to flourish in a EU environment. Okay, great. It's not working. And so, did anybody consider the fact that we have 100 operating reactors here in the U.S. and we only, like I said, don't even produce enough uranium or material here in the United States, conversion and we neglected our industry for 40 years. And all of a sudden, we have politicians making decisions who aren't qualified to push a broom in a warehouse or drive a forklift because it sounds good in a press conference. This is the realm of the speculator, taking advantage of, as Soros said, what is the premise that's incorrect and then trade against it. And so I think it's going back to uranium. It's very politicized. All of these resources are politicized, especially going forward as the global South and East bifurcates away from the hegemon. And so you're going to see these things used as different political weapons. Okay, fine. We go back to uranium. People say, well, what's going to happen? Well, if you look at conversion and enrichment prices, they made all-time highs recently, last month. These things are not. The problem with the uranium market is it's so Ben Hodges at Ocean Wall just had an interview the other day. He was talking about how opaque and how the pricing reporting goes. It's not like, if Saudi Arabia came out on Monday morning and said, we're cutting production by 20%, oil prices would be limit up for a week. It'd be $100 a barrel. The price is reflected in the news very accurately in most resource markets because they have these futures markets and people can digest the news and the market's able to price accordingly. It just doesn't exist in uranium. It's just a very opaque market controlled by a few traders, and we don't get accurate information on term pricing. For example, if you look at term pricing for uranium, it's been it stays the same or has went up every month for the last 28 months. So the term market being long-term contracts.
Yeah.
And then way this guy from Ocean Wall described it, which I didn't know, which made perfect sense. They report whatever the lowest number is. So say a contract got signed by somebody and had a floor of like 75 and a ceiling of 100. That's what gets reported on this term, is 75 price, not the fact that it's $150 a pound ceiling. That doesn't get reported. And so there's a lot of NDAs, non-disclosures. Utilities don't want to talk about what they're paying or willing to pay. These are all happening, long-term discussions with individual companies, and you just don't have all this information flowing out where people can get price, and there's no real futures market to get price discovery. And so that's part of the problem, but that doesn't negate the supply-demand fundamentals. And so another thing, look at the conversion and enrichment. That's telling you what's happening, because you don't go out if you were trying to buy fuel for a nuclear reactor at a utility and your first conversation is not with Cameco. It's with the enrichers and the conversion guys, and then it flows back. You set all that up, and then you buy uranium to feed into that. So, basically, depending on who you want to listen to, we have anywhere from 30 to 40 million pound per year deficit between supply and demand, which is going to get worse, not better. And we don't see the requisite billions of dollars of investment. It doesn't really matter, if Encore gets Alta Mesa going and it gets up to 2 million pounds a year. That's not going to do anything. People say, well, when NextGen's mine comes on, it'll be 25 million pounds. When's it coming online? Where's the what have they started construct? When is this going to happen? So again, we just had Deep Yellow, for example, John Borshoff's company, who I think everybody would acknowledge is one of the pillars of the. I mean, he's done it before. He built Langer Heinrich.
Yeah.
They just pushed off the final investment decision for Tumas because they said the price is too low. We're not going to do this. So this is what you're seeing in reality. You're not seeing people, all this capital come flowing. So I think you're going to see over time the price go up. I've always said that you're going to run into what I call a musical chairs moment where somebody has not been paying attention and has not made the necessary arrangements and is not going to have their fuel for their reactor. And you're going to start seeing maybe a utility announce like a D rate, or we're going to have to put this thing into cold shutdown because we didn't do what we thought we were going to do. And as gold is now flowing from the west to the east, uranium and all this stuff is flowing from west to east. And I think if you're not paying attention to what's happening in that, then you really are doing yourself a disservice. So uranium is my number one going forward. It's going to, barring a nuclear disaster, I mean, 14 gigawatts of new nuclear is coming online this year, 12 new reactors. I mean, you can go to the WNA, they list everything that's coming online. None in the US, by the way. Russia, China, India, same Bangladesh. So it's the global east and south that are driving the demand. So I think that energy is going to have a good year, oil and gas. This The EU now has decided after I don't even remember what round of sanctions are on, 14 or 15, that they're going to sanction US or more pipeline gas. You saw Ukraine did not, even though most people didn't understand this, that the pipelines from Russia were going across Ukraine undisturbed. There was a lot of gas flowing from Russia through Ukraine into Eastern Europe. And so that's a problem now for like Slovakia and Hungary and some of these other countries because, and so of course the US is there saying, well, just buy more of our LNG. And LNG is expensive relative to the pipeline gas. So I think that you're already seeing the natural gas prices in Europe are moving extremely higher. We're seeing gas prices in the US move higher. I do not have you see oil prices have woken up late last year and into this year so far. And so I have a view that some of the analysts I follow, and I might just be biased because I want to see higher oil prices, but uh, you know, not to get too far down this road, but what is the condition and what is the viability and forward ability of shale to increase? When we say shale, we're basically talking about the Permian Basin. And I've already, as I said earlier in the earlier part of the discussion, I don't see the operators there saying, we're just going to go out and drill the heck out of this place. That's exactly what they're not saying. And then you have certain arguments being made by people, certain geologists and other analysts that, maybe we've plateaued in the Permian. And if we've plateaued, then we're back to market share shifting away from non-OPEC and primarily the shale operators to back to OPEC. And so the idea is, well, don't worry about it because if shale happens to plateau or what have you, then OPEC has 4 to 6 million barrels of spare capacity and it won't be a problem. But do they? I mean, you can go back and look at every time that Saudi tried to increase production. They were able to do it for some short period of time, but not sustain for years. And I would suggest to you, I mean, people should go out and read Matt Simon's book, Twilight in the Desert, where he talked about the Saudi reserves and Ghawar and all these things back when they had the first peak oil scare back in the mid aughts, 2005, six, and then shale came on and everybody forgot about that, right? I didn't forget about it, and I had read about the shale geologist King Hubert that back in the 50s talked about depletion and how an oil well, an oil field, a petroleum area eventually, goes in plateaus and eventually goes into decline. Now, I'm not suggesting the Permian is going to go into decline. I'm not a geologist, but I am seeing more and more indications, shale in the oil production in the U.S. has basically not really moved higher over the last year. And the same thing with gas production. So have we reached the end? The counter argument could be, and I think this is a legitimate argument. Well, John, it's just a manifestation of price. if oil goes to 90, $100 a barrel, they'll throw enough rigs at it and money, and you'll get another production surge. Maybe. But I do recall that, Harold Hamm, who is the big guy that developed the Bakken shale, he's already said it's peaked. So you get to a certain situation where these places are eventually, they're not endless cornucopias of oil. And so if shale has indeed peaked in the US or is at least plateauing, and we're not going to get regardless, we're not going to get 3 million barrels of new oil out of the US at current prices. So we know that. I've already explained why that's not going to happen. And so demand continues to go up at a million barrels a year, for example, because of the emerging market demand. And what's happening now? We're in a seasonal time right now where oil typically does better just because of heating demand and things like that. But I think again, the geopolitical context of Europe's going to ban this pipeline gas, but if you look at where Europe gets its LNG, a lot of it still comes from Russia. So there's a lot of what does that really mean? And then this Trump administration, if they come in, there's definitely going to sanction Iran again. Those Iran sanctions are going to go on. So what does that do? So I think there's an opportunity, at least for the range of oil, to go maybe from where it's been in this year to maybe moving to a high 70s, mid 80s. And that's an area of an oil price where a lot of companies can do very well. A lot of people don't understand that many oil companies, especially mid and small cap, a lot of them have taken the opportunity over the last several years to really pay down their debt. The focus is back on shareholders, fiscal responsibility, not drill, baby, drill. And there's plenty of companies. I have one in the portfolio that several years ago said, we're going to pay down our debt. It's long life oil sands reserves in Canada. They paid down their debt to a certain level they wanted to get it down to. And then they said, when we hit this level of our debt, which is pretty low, they're not going to get rid of all of it. We're going to go 100% of free cash flow back to shareholders, and that's what they're doing. So you're seeing more and more companies. So you're seeing more buybacks, and dividends. So you're looking at in some of these oil companies, total what I call total return. What are you getting in buybacks and dividends? And you can get a pretty nice return. And then you still have the potential for an excess capital gain if, in fact, oil prices do move higher, which I think is going to be the bias over the rest of the decade, just because of the underinvestment and the fact that depletion is never ending. And regardless of what, I think Exxon said that the entire world depletes at 6 to 7% a year. So 6 to 7% a year at 103, 104 million barrels plus a million barrels of demand. That means 8 million barrels a year. That's a new Saudi Arabia that you have to find and bring online every year. And we haven't been doing that. Shale has masked that. And if we have plateaued, then we got big problems for the oil price going forward.
Right. Let's wrap it up with this. We covered a lot today, John. I want to thank you for this chat. Please, how can investors and people connect with you and reach out to you?
Well, I'm on X. I just kind of use that. I curate a lot of people that I follow there, a lot of smart people there. I'm on there. My YouTube channel, just put my name in there. You'll pop up. I have a weekly video that I talk about these things. Then I'm on Substack. I have a paid newsletter offering and a free weekly newsletter. And you could just look up Actionable Intelligence on Substack and it'll come up. So that's how people can get a hold of me.